wrap up the third quarter and head into the fourth quarter, there are definitely some things playing out in this housing market that we need to pay close attention to. Make sure you watch through the end as we offer a bonus insight with predictions breaking down the market. I'm Mike Field with Field Realty, and this is your October 2023 market update covering the Capital Region's 4 main counties: Albany, Rensselaer, Saratoga, and Schenectady.
The total number of new listings to hit the market in the last 30 days is down 11%. You may recall, last month this figure was only down 2%. However, the previous 6 months, this number fluctuated between 20 and 30%. With a lot of volatility, it will be interesting to track this number in the next few months. The number of current total active listings is down by 7%, and the number of new contracts is down by 5%. Jimmy's up next to discuss the number of units sold.
All right, the number of units sold is down by 33%. Now let's think about that number for a second. Every time a house closes, there are so many ripple effects in the economy to where it stimulates other businesses. In fact, there are over 80 different business vendors that benefit from an individual closing. So for the overall health of the economy, we would like this number to trend back up. The overall total sold volume for all 4 counties was down by 25%. Even with prices up, the lack of units sold is the reason for this drop.
Overall, the average sale price was up by 7% for the second month in a row. Also for the second month in a row, Saratoga County had the largest increase, this time by 21%. One contributing factor was the multiple luxury deals that have closed in Saratoga in the last 30 days. Perhaps you saw some of the recent local headlines and media outlets reporting those transactions. One of the stats that we are more closely monitoring is the sale price to list price ratio. As we work our way through the year, this figure tells the story on how aggressive buyers are. Last month, homes were closing at 103.5% of the list price. This is a lagging indicator from the contracts that were written in July and August.
Now for some bonus insight. Since we typically do the year-over-year comparisons for our monthly market update, I wanted to take a little further and provide some more perspective by comparing this past month to the previous 8 years. Now, for the month of September, the 8-year average for the number of contracts written was 784. This past month, we only had 648. That's an 18% decrease from the 8-year average, or a 40 and 27% drop from years 2020 and 2021 respectively. The average sale price in 2016 was $231,000, and this year it was $370,000. For any homeowner out there, kudos to you because you have built up a tremendous amount of equity. The average days on market 8 years ago was 62, and this year it was 21. So here's our outlook as we head into the fourth quarter. Prices are going to remain high, and so will interest rates. Buyers today are buying for today with the idea that a refinance in the next 12 to 24 months will probably be the best option. When rates go down, prices are going to go up. So whether you're buying today or waiting for the rates to come down, it really comes down to how you look at the market. You can either wait for rates to drop and the prices will be up, or you buy now as the market has cooled and you can get in at a lower cost of entry. For the sellers out there, we just talked about how the days on market is a record low and prices have never been higher. If you receive any value from this market update, go ahead and like this video and subscribe to our YouTube channel and turn on your notifications. Be sure to also like our Facebook page and follow us on Instagram so that you can keep up with all the latest with regards to the Capital Region real estate market. This has been your Capital Region housing market update from the Field team. If you have any questions on the market, call us today. Thanks for watching, and don't forget the home field advantage.